Good day Forex trader. Your USD Forex Signal, short-term bullish retracement from $1.0900 area. The long-term bearish trend remains likely to resume. Today's your USD signals. Risk 0.75%. Trades must be taken between 8 a.m. and 5 p.m. London time today only. Short trade idea. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.0937, $1.0956, $1.0985, or $1.1025. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 50 pips in profit and leave the remainder of the position to ride. Long trade idea. Long entry immediately upon the next touch of $1.0710. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote on the 23rd of March that we were seeing a weekly bullish short-term consolidation above the support level at $1.1012, but it was far from clear what direction the price would take over the day. I thought that a long scalp trade between $1.1000 and $1.1012 might be a good opportunity, but this did not set up. Over the past couple of weeks, we have continued to see typically deep bullish retracements within a long-term bearish trend which eventually keep reasserting itself. If the price can make a daily, New York, close below $1.0854, it will be making a new bearish breakdown to multi-month lows, which would be a bearish sign. Over the shorter term, we see a bullish rounding near $1.0900, which is pushing the price back up towards the nearby resistance levels, of which there are several, in a bullish retracement. The question is how far this retracement will run. I think the best approach here today will be to look for a new short trade entry from a convincing reversal on the hourly time frame off any of the nearby resistance levels identified above. I do not want to take any long trades today, although today could be an up day. Gbp Usd Forex Signal, Gbp falls below symmetrical triangle. The pair will likely keep falling after it moved below the triangle pattern. Bearish view. Set a sell stop at 1.3040 and set a take profit at 1.2970. Add a stop loss at 1.3120. Timeline, 1 day. Bullish view. Set a take profit at 1.3120 and a take profit at 1.3200. Add a stop loss at 1.3050. The overall strength of the US dollar pushed the GBP USD price below a key support level. The pair dropped to a low of 1.3042, which was the lowest level since March 16. It has fallen by 1.72% below the highest point in March. Strong US dollar. The GBP USD pair declined because of the strength of the US dollar. The dollar index crossed the important resistance level of 100 on Wednesday as the American yield curve continued inverting. The difference between the 10-year and 2-year bond yields declined to the lowest level in years. As a result, analysts expect that there will be a recession in the next few months as the Fed embraces a more hawkish tone. Minutes published by the Fed showed that most members of the FOMC believe that it is necessary to accelerate the pace of rate hikes. As a result, they expect that the bank will hike in the remaining 6 meetings of this year. Some of those hikes are expected to be 0.5%. This explains why government bond yields have risen to the highest level in over 3 years. The GBP USD has declined because analysts expect that the Bank of England, BO, will lag the Fed in rate hikes. While the bank has already implemented 3 rate hikes, Andrew Bailey has warned that a pause is necessary as the bank reflects on the past hikes. He also expects that the economy will suffer because of the ongoing war in Ukraine. The economic calendar will not have any major events from the UK and US today. Therefore, investors will continue to reflect on the Fed minutes. In the UK, Halifax will publish the latest house price index, HPI, which is expected to show that prices held steady in March. The US will also publish the latest initial jobless claims data. Gbp Usd Forecast. The Gbp USD pair moved below the important support level at 1.3110 as the US dollar strength prevailed. This was an important price since it was at the tip of the symmetrical triangle pattern. It has moved below the 25-day moving average. It also tested the crucial support level at 1.3047, which was the lowest point on March 29. Therefore, the pair will likely keep falling after it moved below the triangle pattern. If this happens, the next key support level to watch will be at 1.3000. Aud Usd Forex Signal, Aussie sell-off getting overdone. While the overall outlook is bearish, there is a likelihood that the pair will bounce back as investors buy the dip. Bullish view. Set a buy stop at 0.7520 and a take profit at 0.7645. Add a stop loss at 0.7450. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7440 and a take profit at 0.7350. Add a stop loss at 0.7600. The AUD USD pair retreat continued on Thursday morning as analysts increased their bets that the Reserve Bank of Australia, RBA, will take off in June. The pair also declined after the extremely hawkish minutes by the Federal Reserve. It is trading at 0.7477, which is lower than this week's high of 0.7660. June rate hike in Australia. The RBA concluded its monthly meeting on Tuesday. While the bank left rates unchanged at 0.1%, it hinted that it was losing patience on inflation. Therefore, after reading the report, many analysts are optimistic that the bank will deliver its first interest rate hike in June. According to the Australian Financial Review, 7 of the economists it interviewed said that they expect a June hike. They included analysts from leading institutions like ANZ, Goldman Sachs, Macquarie, JP Morgan, and Jarden. Other economists who expect that the RBA will move in June are from UBS and Commonwealth Bank. In a statement to the Senate, the RBA deputy governor said that the bank was surprised about inflation had risen so rapidly during the pandemic. In 2021, the RBA was signaling that the bank will deliver its first interest rate hike in 2023 or 2024. She blamed inflation on the ongoing supply chain challenges. The AUD-USD pair also declined after the latest minutes by the Federal Reserve. The minutes showed that the bank's officials were expecting inflation will remain sticky in the near future as the crisis in Ukraine continued. Most members also sounded more optimistic about more rate hikes later this year. Some members also supported quantitative tightening. Earlier today, data by Australia's Statistics Bureau said that the country's exports rose by 0% in February. Imports also rebounded by 12% while the trade surplus narrowed to $7.1 billion. The rising commodity prices will lead to higher exports. AUD-USD Forecast. The AUD-USD retreated as the US dollar rose after the hawkish FOMC minutes. The pair is slightly below the highest point this month. It has moved slightly below the 25-day and 50-day moving averages while the Relative Strength Index, RSI, has continued moving downwards. It is approaching the oversold level of 30. The pair also moved slightly below the key support at 0.7537, which was the highest point on March 25 and 30. Therefore, while the overall outlook is bearish, there is a likelihood that the pair will bounce back as investors buy the dip. If this happens, the next key level to watch will be this week's high of 0.7650.